filming talking about revaluing gold. All of these things continue to come together. And maybe what's even the most interesting about all of it is that gold's at all-time highs, but how many people even know it? Yeah, the people watching this show know it, but no one knows it. I mean, it's so underplayed by the media. It's absolutely crazy. And if you would have told me we'd be at 3,300 gold and no one would notice it, I would be completely dumbfounded. And that's where we are. The retail hasn't taken part in this at all.
In today's news recap, gold continues to dazzle as it smashed through the $3,300 per ounce level, setting fresh all-time highs. Investors are rushing to gold as a shield against the rising uncertainty caused by intensifying trade disputes between the U.S. and China. Spot gold surged to a record $3,317.90 on Wednesday, reigniting a rally supported by President Trump's ongoing tariff push, steady central bank accumulation, and the increasing likelihood of interest rate cuts from the Federal Reserve. Analyst Ross Norman described the price action as a clear warning, saying gold is adjusting to reflect today's global dynamics. He noted that strong, conviction-driven buying began nearly a year ago, some of it possibly underreported purchases by central banks, and this momentum is only growing as more buyers jump in on strength. So far this year, gold has climbed about 26%, drawing parallels to its dramatic run during the Iranian Revolution in 1979, 1980. When prices spiked by 118% in just a couple of months. Adding more fuel to the fire, Trump on Tuesday launched a new investigation that could result in fresh tariffs on all critical mineral imports into the U.S. along with other products, keeping markets on edge.
You know, really all of this stuff started changing when I started coming on your show. We started by talking about gold's reclassification as a tier one. We talked about the central banks going on a buying spree. We talked about the central banks going on a repatriation spree. We've seen the rise of the classification called the others on the COMEX that had started draining the COMEX in 2020. I started saying to you on your show, this has never happened before. What the heck's going on? We've seen this trend continue. We see the central banks continuing to buy gold and silver. We see, and those numbers increasing. We see the repatriation by central banks continuing. We see the United States become a net importer of gold and silver, in particular gold, since November. We see massive deliveries into the COMEX since November. We see a LBMA breaking down. We see an LBMA that was T+1, now T+8 weeks. So from 1 day plus the trade day, 3-day settlement, you're now at 8 weeks. That seems like a default. We see JP Morgan, who always I lamented, how could they be allowed to be the custodian of the world's largest silver trust after paying the largest fine the Justice Department ever handed out for manipulating the market? Well, they've now become primary custodian along with BlackRock, not only of SLD, but also GLD. In two vaults, they hold more gold than 80% of the G20 countries. All of these things together are substantial. You put them together, something much bigger is happening. You look at Judy Shelton talk about 50-year treasuries that she is convinced will be announced on July 4th, 2026, the 250th year anniversary of this country. She says Trump has told her that. They've had discussions on it. You see talks from the head of the Dutch National Bank and the Bundesbank and Senator Loomis from Wyoming talking about revaluing gold. All of these things continue to come together. And maybe what's even the most interesting about all of it is that gold's at all-time highs, but how many people even know it? Yeah, the people watching this show know it, but no one knows it. I mean, it's so underplayed by the media. It's absolutely crazy. And if you would have told me we'd be at 3,300 gold and no one would notice it, I would be completely dumbfounded. And that's where we are. The retail hasn't taken part in this at all. So as we've talked about on your show a million times, the little man rule, or just the very fact that the big money always positions in front of the herd, Well, you could argue that's what we see right now. And everyone's been waiting for the other shoe to drop in gold. It did drop while I was in Europe, of course, and fell by $200. But when it fell by $200, the amount of closing out of open interest was in the billions of dollars. In other words, the managed money who had gotten really long against large short positions by the commercial banks, how many more times can they do this? Can they drop the price down to bail them out? Well, that's what they did. They smashed the price and they closed like $4 or $5 billion, maybe even more $billion worth of contracts that were open, that could have stood for delivery. And then the price goes up $300. And the same thing is true with silver. So there are desperate attempts to keep the price from rising too fast and being on the wrong side of it. And yet, even after they smash it, where in years past it never would have come back, here we are way past where it started when they knocked it down to almost 3,000, just under 3,000, I think, from around 32 and change to now over 3,300. And it's come back in a matter of 2 weeks. And so there's strength and something going on in the gold market. And you put all of these things together, you have the biggest money in the world accumulating and onshoring and repatriating gold, getting out of the system. You have talk of gold being integrated into a new system. Even the BRICS has said, Dilma Rousseff, we've agreed to a new settlement token, the unit, backed by and redeemable in gold. All of these things, how many clues do we all need to understand that gold is going to be somehow, some way, whether it be through the unit, whether it be through gold-backed treasuries or something that we don't see. Gold is reintegrating into the monetary system. And the biggest players in the world, I don't care what they say, their actions are telling you that is indeed the truth.
Later in the week, gold also stormed past $3,200 on Friday, driven by a weakening dollar and escalating U.S.-China tensions that have sparked concerns of a looming recession. Spot gold rose 2% to $3,236.67 after touching $3,243.82 earlier in the day. U.S. gold futures climbed 2.4% to $3,253.20. The yellow metal remains the go-to asset in a world grappling with trade turmoil. The dollar's decline and a sharp sell-off in U.S. Treasuries suggest weakening trust in the U.S. as a dependable economic partner, according to WisdomTree's commodity strategist Knight Shash. Meanwhile, China responded by raising tariffs on U.S. imports to 125% on Friday, ratcheting up the standoff. The greenback's decline has made dollar-denominated gold more affordable for international buyers. A mix of ongoing central bank demand, rate cut expectations, global tensions, and growing inflows into gold-backed ETFs has helped propel gold higher throughout the year. Adding to the story, U.S. producer prices dropped an unexpected 0.4% in March. However, the impact of rising tariffs is expected to push inflation higher in the months ahead. Markets now anticipate the Fed will restart rate cuts as early as June, with roughly 90 basis points of easing forecast by the end of 2025. Metals trader Tai Wang noted that while a short-term pullback in gold could happen, the broader trend is upward, with inflation data giving the Fed more flexibility to ease and weakening the dollar further. Silver also saw gains, rising 2.7% to $325 per ounce. Platinum added 0.2% to $939.80, and palladium edged up 0.6% to $191.50. We'll get to the latest interview clips in a moment, but make sure to subscribe and turn on notifications so you never miss our daily updates.
Silver goes further. I mean, that's a truism that there are many examples where you can show that, but gold has gone first for sure. The setup for silver is even stronger and more compressed, like a coiled spring, than with gold. And it's the reality that people don't want to deal with, that silver is more important than gold to some of the very big players like the military industrial complex, as we've talked about, who needs copious amounts to make their high-tech weaponry. And that works real well in an environment where no one's buying silver. But the amount of, look, we saw 50 million ounces delivered into the first day of the March contract, 50 million ounces on day one. And so the demand for silver is off the charts. You're seeing India buy 900 million ounces of it in the last 4 years or thereabouts. That's more than the COMEX and the LBMA combined. And you see China, the second largest producer in the world, flying all around Latin America, buying doré and concentrate. What do they need to do that for? And then sending it back to be refined. It's being accumulated by the state in Russia, the first government that I know of that's made a public admission of this. And so, you know, the amount of silver drained from the LBMA, 70 million ounces, all-time monthly record in January, huge deliveries in February, and very large deliveries in March, although the LBMA is kind of putting the brakes on it because they're getting bled dry. Evidently, it's a shortage of trucks in the UK that is not enabling them to continue to deliver at the same fashion. But any way you look at it, this is an opportunity that you don't see very often in investing ever, where if you traded your gold to silver, a double plus would be just reaching the 200-year average, price average of the two, which would still be over 6 to 7 times higher than it's coming out of the ground at. It's one of these deals where, you know, I think the asymmetrical risk reward in trading gold to silver is probably the lowest I've ever seen, where you trade an ounce of gold, which in fact I did it gold eagles to silver eagles today, and it amounted to 85, 86 ounces in eagles. If you were to do it in something else, it would be even more. But even 86 to 1 in real terms is off the charts. So, you know, you get 86 ounces of eagles for every gold eagle or thereabouts. And if all that we saw was that it went back to its 200-year price average of the mid 40s, you double what you started with by trading back into gold. And I think it's a no-brainer. So yeah, these are trades you don't see but maybe once or twice a lifetime or a career. It is a no-brainer from a standpoint of historical context in both gold and silver pricing and in their relationship.
Now, what's your take on Andy Schectman's forecast of gold surpassing $3,300? Do you think he nailed it? Or could we be looking at just another short-lived spike? Are we stepping into the explosive bull run he's been calling for? Or is this another high before a pullback? More importantly, are you stacking right now? Are you going for physical gold and silver or looking into mining stocks? Drop your thoughts in the comments. I'm reading every single one. And stay alert, the financial landscape is changing rapidly, and the best opportunities don't sit around. Check out the next video. It ties right into everything we've just covered. See you there.